Sir, financial markets. I would like to give a few of the major steps and initiatives being taken by the government for the financial markets. Last year in my budget speech, sir, I had mentioned about deepening the bond markets. To achieve the aspirational growth rate, we would require flow of capital in our financial system. A lot of work has been done on this in consultation with the RBI. Honorable Speaker, sir, I am pleased to inform this House of the developments. Certain specified categories of government securities would be opened fully for non-resident investors, apart from being available to domestic investors also. The limit for FPI in corporate bonds, currently at 9% of outstanding stocks, will be increased to 15% of the outstanding stock of corporate bonds. To improve investors' confidence and to expand the scope of credit default swaps, we propose to formulate a legislation to be placed soon before this House for laying down a mechanism for netting of financial contracts. The debt-based exchange-traded fund, the ETF, recently floated by the government was a big success. Government proposes to expand this by floating a new debt ETF consisting primarily of government securities. This will give retail investors access to government securities as much as giving an attractive investment for pension funds and long-term investors. So to address the liquidity constraints of the NBFCs and the HFCs, this was very much talked about between July and December last year, sir, 2019. Liquidity constraints was very frequently mentioned to us. So to address liquidity constraints of the NBFCs and the housing finance corporations, post the Union Budget 2019-20, the government formulated a partial credit guarantee scheme for the NBFCs. To further the support of providing liquidity, a mechanism would be devised. Government will offer support by guaranteeing securities that are so floated.